Sensex, which is like a scorecard for the market, saw a fluctuation of around 300 points throughout the day. It hovered around the 80,000 mark, closing at 80,150, which is a crucial psychological level for many traders. The Nifty, another key market tracker, also experienced some ups and downs, ending the day at 24,200, up by 50 points. Overall, today's market activity reflects a cautious optimism among investors, with a focus on upcoming economic data. Analysts are keeping a close eye on the market, anticipating how upcoming announcements might influence future trends. While global factors continue to play a role, today's market update shows a resilient and adaptive Indian market. This just highlights how interconnected our market is with the global financial system. Events around the world can still send ripples through our market, but today's update shows a strong and responsive Indian market. Stay tuned for more updates as we continue to monitor the market's performance and bring you the latest news. On December 18, 2024, the US Federal Reserve, also known as the Fed, made an announcement that surprised everyone. The financial world was on edge, waiting for the Fed's decision. People were expecting them to cut interest rates 4 times in 2025, which would have been a significant move to stimulate the economy. But the Fed said they were only planning on 2 cuts, a much more conservative approach than anticipated. This more cautious approach worried investors, who had hoped for more aggressive action to boost the economy. The impact was felt globally, and the Indian markets were no exception. Investors in India were particularly anxious. The Sensex and Nifty both saw significant drops as the news broke, reflecting the broader market's unease. Concerns about rising inflation in the US also added to the worries, as it could mean higher costs for imported goods in India. The Reserve Bank of India will now have to carefully consider its own monetary policy in response to these developments. The market didn't like the Fed's cautious tone, thinking it meant easy money might be ending sooner than expected, leading to a more volatile financial environment. The Fed's announcement had a significant impact on the Indian market today. Key market indicators in India finished the day lower. The Sensex in Mumbai and the Nifty 50 both saw declines. This highlights the interconnectedness of global markets and the influence of the US Federal Reserve. The US economy's size means that Fed decisions have worldwide repercussions. Because the US economy is so large, what the Fed does affects everyone. Investors in India and around the world closely monitor the Fed, and any changes can trigger significant market movements, as seen after their recent announcement. Let's delve into the sectors and companies that were most affected. Most sectors of the market experienced declines, with banks and real estate companies being hit the hardest due to their sensitivity to interest rate changes. Higher interest rates have made borrowing more expensive, impacting the profitability and stock prices of these businesses. Among the top 30 companies in the Sensex, Bajaj Finserv, JSW Steel and Reliance Industries were the biggest losers, with significant declines in their stock values. Bajaj Finserv's stock dropped by 2.53%, reflecting investor concerns over its future earnings. JSW Steel went down by 2.21%, as the market reacted to potential challenges in the steel industry, and Reliance Industries fell by 1.82%, adding to the overall market gloom. Other major companies like Infosys, Tata Motors, Mahindra and ICICI Bank also saw declines, contributing to the widespread market downturn. It was a challenging day for many companies, leaving investors worried about the future. Despite the downturn, some sectors showed resilience. Defensive sectors like pharmaceutical companies remained stable. Companies such as Sun Pharma, Power Grid Corporation of India, and Hindustan Unilever saw minor gains. Experts advise caution in the current market environment. While the Bank of Japan's steady stance is positive, the overall sentiment in the Indian market remains cautious.